Well, hello, you trader nerds. Good to see you on this terrific Tuesday. Real nerds never trade by themselves. They trade with their fellow nerds like Bruce and DB and Don and Dwayne and Gabriella and Hal and Hugo and Jason and Joel and Matt Jollywally and Mike and Mo and Nadeem and Rocky Balboner and Stacy and Steven and Vicky and Theta and Vicky and Walt with them. Good to see all of y'all in the Discord today. Hope you're doing well as we still are licking our wounds. I got to tell you, and let me split the share just for a second and have a heart to heart with you for a moment. Um, I am taking your losses very seriously. And yesterday I thought, let's jump back in and let's do the 111 again and let's make it safer. And let's make sure that we hedge appropriately. We keep our size small. We dive back in. And then I teed up a 111 trade and I just couldn't pull the trigger. Now, I know what some of you are thinking. You're thinking that, Bobby, you're scared to go back in the market. And it's not that at all. I don't want to go through what we went through on Monday ever again. And I've been thinking and thinking and thinking and thinking about how we can make this plan safer and safer and safer so that we don't go through that again. And I'm going to talk to you about the Oak Ridge Boys song, Trying to Love Two Women is Like a Ball and Chain. You can't love two women. You got to love one woman and go with it. And so there is a part of me that says, hey guys, it got us. Once in a 10-year event, with that much intraday volatility, let's get back in, let's go back and let's do it again. And let's build up because it worked so good from August of 2021 until August of 2024. It was a marvelous, marvelous, marvelous trading plan. But it's kind of like going to the ball game and baseball game and we're hitting and we get single after single after single after single after single. And we kept scoring and scoring and scoring. And then all of a sudden, one day, the stadium collapsed on us and killed us all. That's what Monday was to a lot of us. And I've spoken to some of y'all that have lost $300,000. I've spoken to some of y'all that have lost $500,000. Some of you lost 20,000, 40,000, 100,000. Some of you've lost different amounts of money. And I take that very, very seriously. And I have really, really struggled because here's if we're going to do what's right for my YouTube channel and my Discord room, then the best thing probably for us to do is go back to the 111 and let's do it and let's knock it out and let's get our 20% and let's go for it again and again and again. And that's probably the best thing business wise for me to do is to say, let's do that. But then I don't necessarily think that that's the safest thing for us to do because I think the day's going to come when we're going to get blistered again. I just think it's coming. And I know we can define our risk and we can do all of this, but I just don't see it. So a part of me wants to go back to what we were doing. Let's size appropriately. Let's hedge appropriately. Let's do everything that we know to do. And I think that would probably be best for my Discord channel. And that would probably be best for my YouTube views. And people would love the 111 and 112 again and appropriate hedging and all of that. So that's one woman trying to love two women. There's that woman sitting on the fence going, my, ain't she pretty? And we could do that. And the Discord would continue to grow. And we've got over 1,000 people in Discord. And we're just marching along. And we're all trading. We're having fun. And then every so many years, we're going to get smack dab right in the face again. So that's what's sitting on one, you got the angel on one shoulder and you got the devil on the other. So the other shoulder, sitting on the other shoulder is sitting here. And I was talking to David yesterday. David and I had a session. And I'm not sure if David's in here today or not. He may be traveling. But David and I had a session and he says, Bobby, what are you doing? He says, you're going to get smacked dabbed in the face again. It's just a matter of time. What are you doing? Why would you go back to that? Why would you subject yourself to that? All you got to do, Bobby, is put your money in bonds and run your hedge campaign wall. And you're going to make generational wealth once every 2 to 3 years. He says it's coming again. You're going to get smacked down in the face and you're going to get, generational wealth. And then there's a part of me that goes, well, that won't be entertaining to people. Nobody will watch the YouTube channel if we're just building a wall of hedge. That's kind of boring. And then your hedge wall is probably going to go down in value. And instead of playing the Jeffersons every day, we're going to be playing ball. And you're going to be going down every day. And you're going to be waiting until that big, big day. So it's kind of like us playing baseball and we're getting beat and smack dabbed and we're just getting beat by people knocking singles. And then all of a sudden we come up and we hit 3 grand slam home runs like back to back to back to back. That's what this would be like. It would be different. It'd be like, oh, we're out today. Oh, we're out today. Oh, we're out today. Oh, we're out today. And all of a sudden you hit the grand slam. So if you were to ask me, hey, Bobby, what is the best thing for my account? Then I would say probably the best thing for your account is not to do the 111s and not to do the 112s. Now, I know all the other YouTubers that are doing the 111s and the 112s are going like, let's go back, let's refine it, let's make some tweaks. I don't see enough tweaks possible to make it a safe strategy that we don't get gobsmacked again, smacked right in the face. I don't see it. So while there is a part of me for business reasons that says keep going with the 111 because that's what everybody wants and that's where the excitement is, I think that if I'm going to be fair and going to help you to recover your losses, I just tell you, hey, let's try to build a wall of protection and let us make our money back in, I don't know, it could be this fall, it could be after the election, it could be next year, it could be the year after, but the rest of the time it's just going to be kind of boring us build the wall. So you see where the two sides lie, right? And I just want to do right by y'all because your losses are really, 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 Ken says, hey, Bobby, I love 2 women at the same time, but my wife is European. It's expected. I love that, Ken. Good to see you too, by the way, Ken. Auction, it could be in 1 month or 10 years. Who knows? It's exactly right. You don't know, but you know that if we do this, that we're going to make a fortune at once. It's just a matter of time. Can we put our hedges on for break even or, let's say that we do use 3% of our portfolio a year and, it takes 10 years. You use 30% of your portfolio, but you know that day's coming. So that's kind of where I'm at. What are y'all's thoughts? What? Yeah, I like what you said there. Nadine said, build the wall. There is a inherent issue in 112, no matter what you hedge. I think that's right, y'all. I think we're going to get gobsmacked in the head one more time. And I don't want to do that.
I haven't been here in a while, so please take this for a grain of salt. These 111 and 112 strategies are inherently short.
Yeah.
I mean, apparently bullish because you're short the put. So I think I like it, but I personally have abandoned the theta burn as my primary vehicle. So take that for a grain of salt. But absolutely, I think y'all are foolish to not have a big hedge. And so, and I think that you should stay the course, Bobby. I think you're right. Reduce the 112 to the 111 because excessive risk. And right now I trade WD GAN 100% now, and we're going to have lows until mid-October. Well, October 10th, 11th. We're going to go up into the election, and we're going to go down a little bit and up into January and maybe up through March, and then we're going to have it hard bear. It'll be a real bear market. That's what my crystal ball says. I mean, serious bear market. And this is just a taste. And so I know I personally I'm doing day trading and but I'm doing it Gann's way, and so far I've been doing really well. But that's an awful lot of learning for the people that you serve. They need they. I think staying the course is really good advice. Just cut down on the risk. One of Gann's 25 trading rules, 24 trading rules, is that you don't put at risk more than 10% of your stash. He wanted you to be able to lose 10 times in a row and still be able to play. And so size is probably the single one thing to do. Do what you're doing, because I swear the 1-1-2 the strategy, your trading plan is outstanding. Okay. And I wouldn't give it up except for my lifestyle has changed. Being my chicken herding and all the farming stuff I'm doing, is I ain't got time. I just don't have time to do it. So and and so and that's me. So but
Ken, we hatched our first chickens from the mama hens actually sitting on the eggs, which was kind of cool. We had
oh,
some
we're got some going right now. Yep. So
so it's wonderful.
but that's the thing. It's not you. When I popped in, the tone of your voice suggested a little defeat. So maybe take a vacation for a week and get back in it. There's nothing wrong with your system. It's
Well,
just right
I
now
think what's
staying.
taking a toll on me, Ken, is it's killing me that people lost a lot of money on Monday. That's kind of what's saying, and I don't want them to go through that again. I really don't. I don't want anybody to have to go through that again.
And
So I'm not defeated. It's just that I'm trying to think, how is the best way to get folks back in the game without getting popped in the face again? That's what I'm trying to figure out.
I would take your little spreadsheet, which is really a good tool,
Yep.
and reduce the percent, the buying power. The buying power at risk is seriously reduced.
Mm-hmm.
And y'all take my predictions for what they're worth. That and 375 is get you a cup of coffee. But I'm living by them, and we're going to have some very bad times coming. So reduce your risk, reduce the money at risk, and there's nothing wrong if you what's the stock market doing now? If you beat 7%, you beat the market. Beat 13%, you beat the market. The 20% return of a 1-1-1 is nothing to cry about.
No, you're right. You're right. All right, what I wanted to look at today, just to kind of show you things, and so we'll still make our decision, what we want to do. But I mean, I think Austin, that may be a good idea. Track in Vegas should be put back into the plan. One thing I used to do is keep one half of in a 1/2 ratio. If my Vega was negative 400, I would try to have negative 200 in Delta. So anyway, y'all stick with me. I mean, I'm not made up my mind entirely yet on what I want to do, but I'm not ready to dive back into the 1-1-1 at this point. I'm waiting. I'm just watching. I'm watching a little bit, but I do want to go and look at the Vix Hedge. I thought it would be interesting to see how that would have performed, and we'll do it the best that we can. So the market's up 1.25% today. VIX is in the 19 handle. AD is strong at 285, and it is going up, 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 and the market is going up with it. Watch what's happening on the big green monster. The big green monster is fairly priced. It is filling the gap here, and we have a date, it looks like, if we keep going, at 54.60 with the big green monster, and not much to see from the linear regression. It's back in the channel. Things are back going up. Everything's fine. If this event hadn't occurred, we'd all be, pigs and roses, wouldn't we? But you never know. So we had to puke some positions back at that time because of our buying power was negative, and our net lit was actually negative. So let's look and see how the Black Swan would have done on the Vix Hedge the other day. If we can do this. All right, so let's go to the trade tab and let's go to VIX. And what we want to do is we want to do the VIX hedge. Now, let's make sure everybody understands what the VIX hedge is. See if I can pull it up in the latest plan. Let's see. I'm just curious to see how it would have done. I think I put the Vix Hedge in here. Yeah, Vix Hedge is kind of simple. You buy 10 Delta Vix calls equal to 0.25% of the net liquidation value monthly, 120 days to expiration, repeat every 30 days so that over time Vix calls are laddered into 120, 90, 60, and 30-day expiration cycles. Although the Vix hedge can be implemented in all Vix environments, optimally it could be used when Vix is under 20. And the Vix's annual cost will equal 3% of the account's net liquidation value. Now, the cool thing about that is you could say, okay, I understand that the Vix is going to cost me 3% of my net liq. However, in today's environment, before they start cutting rates, if they do start cutting rates at some point, you're able to get around 5% return on T-bills. So it's not inherently bad to say, hey, we're going to break even for a while we're going to do the Vix hedge. Or you could do the Vix hedge in conjunction with the 111-112s. All right. So just want to kind of run through this and kind of see if we can model what it would have done the other day. So we go to Vix and let's go to the 120 days, which is where we would put this on. And let's pretend that we have a $100,000 account. Some of you are like, well, I used to have a $100,000 account. It's not a $100,000 anymore. So you got a $100,000 account, which means that you can put up to $3,000 into the Vix hedge per year, right? So divide that by 12, 3,000 divided by 12. I'm not good at math. Let's do that. 3,000 divided by 12. Is it 250? I've already been working on this. Divided by 12 is 250, right? So you can pay $250 a month for the Vix hedge. Where's my pen? $250 a month. All right. So let's see what that looks like. So then we go to the 10 Delta. Now, y'all know me, most of the time, I use probability of being in the money instead of Delta. On the Vix hedge, that is the only time that I actually do look at Delta instead of probability of being in the money, because for some reason on Vix, these numbers are somewhat significantly different. Are y'all not seeing my screen? Let me share it again.
I was seeing it until you just took it off.
Are y'all seeing it now?
Yep.
Okay, good. So let's go down to the 10 Delta, which will be 0.10. Is here. And as you see, that's 51 cents. So I can buy 5 of those, right? Everybody got me 5 of those. So the 55s, we could buy 5 of those. So let's see what that looks like. Let's analyze trade. All right.
Okay.
Then let's see. All right. So this is kind of cool. What if you'd had this on the other day and volatility had gone to 65? Now that's assuming that you could have taken it off there, right? But that is probably $10,000 to $12,000 winner there. It's kind of cool. Now let's go ahead and pretend that we had those same 55 calls in each expiration. Okay, now that's just making that assumption. So let's go down to 90 days. The 98 days, I guess. And you would have had those same 55s. Buy 5 of those. Let's trade. Then let's go to the 60 days. 63 days. And you would have 5 55s there. Analyze trade. And then finally in the 30 days. Hey, baby. So we'll say 28. You would have had 5 of these here. Now this would have been on $100,000 account. So let's just kind of see what these things would have swollen up to. Make sure we got all 4 of those there. Yep, you would have had this here. How about placing VIX calls on for free in a black back ratio style like we do with the Black Swan hedge? I guess you could do that. I'd have to think about it a little bit, but you could, there may be something we could do there. So let's look at this now. So if the VIX were to get up to 64 is which we got, right? We went up to 64. Now, see, that would have been a fantastic little 1-day shot of poo on your account here. So you would have had $100,000 account and you're up, $50,000 on the account. And that would have cost you 3% of your account. So now the chances of you getting out at when it was 64 probably, you probably couldn't have done that. But let's see what this thing looks like. What does it do when you switch to SPX or ES as your hedge? Let's see what it looks like this way.
You might not have had to get out because it would have offset your losses and your buying power would have probably been fine.
Yeah, you're right, Hal. That's the thing. Do you keep the 111s and do this thing and let these things, so if ES is your beta symbol, that's showing 19,000, but I think it's probably better showing it on the VIX because this probably isn't going to pick up enough there. Let's go back to beta symbol VIX. Yeah, so 41 to $49,000 would have been a fantastic hedge. So that's the Vix hedge, y'all. Now the cool thing about it is your spreadsheet that you have, what's this, has a Vix hedge thingy majig. And so it actually brings in your net lick from your spreadsheet. It brings that in automatically and it calculates the amount of the portfolio to buy Vix calls. And then it's got the instructions here, buy around 10 Delta Vix calls at 120 days with 0.25% of your portfolio, repeat every 30 days. So you ultimately have calls at 20, 90, 60, 30 days. Let them expire under normal market conditions. Alternatively, instead of buying multiple contracts, a closer to the money call could be purchased with the proceeds. So instead of me purchasing 5, maybe I just purchase 1 a lot closer to the money. You certainly can do that too. That day, an $80,000 account, this is Nadeem talking, went negative 110,000. With this 40,000 in VIX would have been some hedge. Do you think there would still be a margin call? Your negative 110 probably was before the markets opened and when it was really, really wide. So you certainly may have still got a margin call. And that's what I'm trying to figure out, y'all. We just don't want to go through that again. I don't want to go through it. I don't want y'all to go through it again. I don't want you guys. And here's the thing too. You guys have been awesome. Y'all hadn't said, Bobby, you fat black glass wearing SOB, you led me into the valley of despair and blah, blah, blah. Y'all hadn't done that at all. Y'all sitting there going, hey, I knew what the risks were. We were printing money. We printed 20% for, 2021, 2022, 2023, and we were already up 20% this year. Everybody was printing money. I just don't want y'all to go through this again. I don't want to go through it again. So I'm figuring out a way that we're going to hedge our way. Now, what I think we're going to do is we're going to buy this Black Swan hedge and we're going to really, really do good. Let me show you what my portfolio looks like today. Now, if we ever get a down day, we did get a down day of 0.4%, but I didn't see it. This is my account right now. Let me update this. It's a little weaker than it was yesterday, but if we get a 1% down or 4% down move like we had the other day, and volatility goes up 40 points, which would take it from VIX 19 to 59, I'm up $15,000. If we go down 20% and VIX goes up 40 points, then we're up $33,000. So this is my account at the moment. No, that's with me selling another 6, isn't it? No, let's see, what is that with VIX there? Let me delete order legs. Okay, that's without order legs. So 33,000 is what we've got to the downside. Joshua, I think both hedges is good too. Now, here's the thing, Joshua, are you going to do that? Austin, I appreciate that. We're all responsible for our own accounts, and I appreciate that. But I want to make sure that what we do is going to get y'all back to a really, really good place. And I think we can do it with the hedges. I think we can do it. Joshua, are you going to do both hedges? You're going to do the Black Swan hedge and the VIX hedge, but are you going to do that with the 111, or are you just going to do hedges? What are you thinking? I'm still thinking about it. I hadn't committed one way or the other. I'm leaning toward hedges with the 112. Okay, good. And all you got to do, y'all, if you want to do the 112, is know your risk. Know your risk. Now we know how to size this thing. Now we know how to go in here. We know how to size this thing. We know how to make sure that what your risk is and size it accordingly. Okay. So good session today. I just wanted to tell you where my heart is. Small sizing with just naked puts and VS8s. That's good too, Matt Jolly Wally. Do without the put debit spread.
Bobby,
Stacy, I'm considering a lower percentage of buying power of 111 and adding some defined risk spreads. That's good. Do some credit spreads. Austin, I'm thinking I'll do break even 111 with wide put debit spreads and roll the higher puts. Okay, so everybody's got something that they're wanting to do. So that's good. I mean, I guess the problem with me being in total hedges is I'm thinking you want the American economy to wreck, and that is boy, that's hard to pull for. You know, you sit there and go, man, I hope the election is contested. I hope it's close. I hope they don't know who the winner is for 3 weeks, you know, and all this kind of thing. But I don't know, being able to sleep at night and not worry about, you know, selling futures and doing all the things sounds kind of cool to me. But I don't know. We'll make our mind up. And I may do a combination of both. I may do how about this? What if I did one portfolio as a 111 hedged, right? 111 hedged, and I did another portfolio as the doomsday portfolio. That would be kind of cool. So I may even do a combination. May do a combination, which would be really
Bob,
good. Yeah.
it's Shimon from Israel. The first time in the Zoom, and excuse me on my English, it's not.
Oh, your English is better than mine.
No. And I see today, the Zoom from yesterday, when I see the 111, 41, and I tested this. I want to share with you what I do, not in the market, only a photograph for 1111. And I don't feel good with this because I have not insurance by the spike or what we are feel in last 3 days. I only do only black swan, and I take from the 7K on profit. Only this I do. And other strategies I do not feel with this because I don't feel with good. I want to share with you a photo.
Yeah, sure. Let me make sure I got it fixed where you can share. Okay, now you can share.
Okay, just a minute. It's not this. Just a minute. No, it's not this. No.
See the little green share button? Under Zoom.
Mhm. Oh, no, no, it's not this. I forgot when I put this in my.
So if you were doing the Black Swan hedges, you did really well then, right?
Oh, no, I don't swimming with this because I want to build a wall, like you said a lot of time, and I waiting for this time because I see a lot of video and I learned from you, but other I want to share with you, but not understand what I put this. I have it's very important to from yesterday. This. Maybe this.